Pump and dump schemes are one of the most notorious features of the crypto world. The exchange of data and the vast amount of capital that could be introduced very quickly into the market mean that pump and dump schemes are rife. And one of the main reasons that people generally avoid investing in cryptocurrencies is because the market can be extremely volatile for almost no reason. In this video, I'm going to examine two different cryptocurrencies, one which I don't believe is a pump and dump, and the other which I have reasonable confirmation is a pump and dump, and look at the differences between them. I'm also going to be examining the thinking behind trading each of those cryptocurrencies and also looking at, in general, what to look out for if you are to avoid pump and dump schemes. Now, in the last 24 hours, there has been a massive increase in the price of a token I follow called Syscoin. In actual fact, CoinGecko can't keep up with the price movement, so I'm actually watching it on a live feed here. It's currently around 47 cents and climbing. It has retraced down to 40 cents and is now climbing further still. But you can see this massive spike here, okay, which hit this liquidity zone here, 1.618, okay, and looks set to continue beyond this. It'll probably settle around here for a little while before ultimately breaking higher, okay. So what separates this type of movement from a pump and dump in terms of a huge market movement and whether it's going to be substantiated for the long term or whether it's going to actually tail off? Because at the moment, I'm not looking to sell this cryptocurrency here. Okay, I firmly believe that this momentum is going to carry through, and I'm going to give you a couple of ideas as to how I believe that. But first, let's look at the research. Okay, so in 2018, an article was published. Not many articles on pump and dump, especially with cryptocurrencies, even though the practice is very, very old. There's been all sorts of history around this, particularly penny stocks and things like that. And one of the main features of a pump and dump cryptocurrency is a small market cap. We're talking maybe something under $50 million, to maybe to 100 million, depending on the size of the amount of people that want to invest in it. They'll also have very prominent social media. Okay, so in the coins that were analyzed in this particular study, there were 20,000, 50,000, 100,000, sometimes even 200,000 people invested in these particular cryptocurrencies. And what would happen is the leaders of this particular cryptocurrency group would say, right, at this time, on this date, this cryptocurrency is going to rapidly increase. Okay, you can either be with us or not with us. Okay, the idea is to introduce as much liquidity into a cryptocurrency as possible, push the price high as possible in the shortest amount of time, and then ultimately the people who held the most cryptocurrency, the most tokens, would sell and effectively get all of that liquidity for themselves. Okay, this is a scam operation. Okay, it's designed for people to lose their money and to reward the large holders. Okay, so in a pump and dump scheme, generally I would avoid trading them, okay, unless you're really comfortable and know what you're doing and you're prepared to lose your money. But at the end of the day, they are movements, market movements, and they are tradable if you understand what is going on. So pump and dump schemes are usually combined with a lot of activity on Twitter, Reddit, Discord, any social media channel usually takes off, and this is where they are kind of isolated, as you can see here. Okay, so this is a breakdown of a price movement with the social media feeds really taking off and everyone buying because the social media says to. There's no fundamental change, there's no big announcement usually. Sometimes there is an announcement that ultimately turns out to be almost nothing, but usually there's nothing. There's just hype, suspense, and excitement about cryptocurrency prices and the jump that's going to happen. Okay, if we contrast this with something that actually has organic growth, we will actually be able to see a difference. Let's look at a classic pump and dump. Okay, so this is Shiba Inu, which took the world by storm back in May 2021, and it actually increased from 155 decimal places on a dollar to 3. Okay, that's a 22 times increase from this over a weekend. Okay, if we're looking in terms of market cap, before the pump, CoinGecko didn't even record the market cap, but in the space of a weekend, almost $3 billion was thrown into this particular cryptocurrency. Okay, so a movement like that has to be coordinated in some way. Okay, no one is going to buy $3 billion worth of cryptocurrency, and you would have seen huge amount of people entering the space of that particular cryptocurrency. Since then, the price has tailed off significantly. It hasn't dumped necessarily, because a dump usually means that the price descends lower than it was previously. Okay, but in this case, the cryptocurrency is so new that it can't do that. Okay, it'll have to come down to this level in order to be a genuine dump. Okay, but a number of people have held, probably because there's a huge number of people that are around here. There were people buying, all the way above this level, okay, who are going to hold down here and wait for the long haul, basically. Okay, but the owners of a huge number of Shiba Inu tokens down here theoretically would have sold up here and made a lot of capital. Okay, now obviously this is the trading world, and morals, you have your own morals and your own ethics, and you can decide whether that's appropriate or not, and whether you'd like to get involved in something like that. Personally, I generally tend to avoid pump and dump schemes if possible. I find them a little bit of a nuisance, and that's why I'm making this video to demonstrate the difference. Okay, if we contrast this with Syscoin, which I don't believe is in a pump and dump at the moment, we can see a jump and then a steadying off, and then a jump and then a steadying off, and then a jump and steadying off, and then usually I think we're on the next jump here now. Okay, so rather than a protracted massive movement in the space of a couple of hours, this actually started around about 8 hours ago. Okay, and we're still in something. There's been no major news. There's been no major movements on socials. Okay, so either what's happening is that an exchange is listing Syscoin and deciding to buy quite a lot of tokens. There might be someone coming on board to buy a masternode, which requires 100,000 tokens, and there might be a sizable number of those investing. Okay, we have had a movement before which resembled a pump and dump. Okay, so if we go back 180 days, we actually see this movement here, end of April to the beginning of May. That's about a 2-week period. That did escalate very quickly, and towards the end did resemble a kind of pump and dump scheme. We went from 65 cents on the 5th of May to 90 cents, almost 90 cents on the 6th of May. So towards the end of these movements, they tend to be very protracted and operate extremely quickly. And then the corresponding drop is also just as violent. Okay, so I would say that that level there is a pump and dump within a larger scale movement. Okay, so you can sometimes get more complicated features and more complicated structures in these movements. This was probably organic growth. At the time, there was a major announcement coming out about the platform, and also a major update as well. Okay, so there was a lot of organic growth here, followed by a classic pump and dump as people bought in because they expected the token to go a lot higher, and then people sold out who had been watching this movement for a little while and wanted to release some funds or release some liquidity. Okay, then we had the corresponding lack of confidence. The market also dropped at the same time in situ with this. We've been hovering around here ever since, and then suddenly we've started to move up recently. Okay, I'm not saying that this is not a pump and dump. It's just been supported by more valid features than the Shiba Inu movement was earlier in the year. So what can you do in terms of pump and dump, in terms of trading? Well, you can actually look at the market and decide what you want to do. So that earlier pump and dump that we had back in August, okay, that went from you actually didn't zoom in there enough, but if you went from 18 cents all the way up to 34 cents, okay, so if you took that as a warning and you felt that the market was actually going to respond favorably over the next couple of weeks, you could draw what I've done here, a Fibonacci retracement tool, and isolate here. It actually told you exactly where to buy, okay, and also where to take profits. Okay, we're currently around that region exactly right now. Okay, so this would be a pause point because it's 1.618 times the target entry. Okay, following that, if we do break higher here and this isn't a pump and dump and does continue, I'll be looking at 63 cents almost, and then ultimately 80 cents before even thinking about taking some profit on the table on this. Okay, I'm owning Syscoin for the long haul, you need to think about your priorities. Okay, I want Syscoin to be in the $2 to $5 region before I probably think about exiting my masternode. Okay, you might have different opinion. You might only have 5, 10, 15, 20,000, and you're looking to take short-term profits. Okay, a move like this would be perfect to take short-term profits. It's just I want to operate my masternode for the long haul, and I don't want to sell out prematurely if I ultimately am going to be rewarded more for holding longer term. And that's one thing you need to decide when you enter these projects, is how long a time frame you want to hold them for. My time frame on this is years as opposed to months or days. If you're a short-term trader, then obviously a pump and dump like this is ideal because you get a lot of liquidity very quickly and a lot of volume very quickly. But ultimately, if I'm using my technical analysis brain, I know that the 200-day has crossed the 50 EMA here, and therefore a movement like this is fully justified as a larger part of my trading analysis strategy. Okay, if the technical analysis doesn't support a movement, okay, and you're looking for any reason as to why a cryptocurrency may have moved, that's another indication that it is a pump and dump. And if you're in profit, I would advocate getting out as quickly as possible. However, not always possible to get out, and sometimes there's no liquidity on these movements. Just because the price has moved up to 44 cents, just because the price of Shiba Inu moved up to this level here, doesn't necessarily mean there's a buyer here who's willing to take your coins off you. Okay, so you may find that during a pump and dump you actually pay extortionate fees for trading. Usually the spreads, the fees charged by exchanges go up significantly because there's a lot more resources that are demanded by the tokens that are moving the most. So be very, very careful with pump and dumps. There is money to be made, but usually it's through other people's losses, significant losses at that, and you usually pay over the top fees for actually trading these currencies, and the liquidity is usually very low. Okay, down here the liquidity might be fantastic. You might be able to get in the market really easily with minimal fees. Once a pump has happened, once the price has increased, there's very few people willing to part with significant capital after a big candle like this. Okay, unless they know something that you don't, and they're therefore in it for the long haul and want to buy here. But theoretically, one of the most talked about and most regarded things in cryptocurrency is a pump and dump, and any cryptocurrency trader who's trading significant capitals will be very aware to avoid buying after large scale movements like a pump and dump.